I want to focus on Uber for a moment. Downgraded to a sell. At Melius, the target goes to 73 from 100. The stock did not finish the year well. The narrative seems to have shifted. And so has the chart. If you back it out a little bit more for what I'm talking about, last 3 months maybe, rather than intraday, you'll see what I'm talking about. You own the stock, right? Down 14.5% over 3 months. Down 9.5% over 1 month. The downgrade today says if growth were to moderate and or further standalone expansion announcements from the likes of Waymo and Tesla were to come in the U.S. market, there is certainly risk that doesn't seem fully appreciated in the market today. That seems to be the key risk in this story.
I don't disagree with that. I owned it personally and in the ETF, and recently, as I mentioned, sold it out personally. One of the reasons why is I did not like that the price action continued to fail, bumping its head against the resistance between 90 and 95. The other challenge is when you look at sentiment, universally you see bullishness. Analyst community right now, 80% buy rating with a 12-month price target of 111. 80 has been strong support for this stock. Unfortunately, my feeling is from a technical perspective that a break below 80 could occur here in the first quarter, and that's why I did not want to own it in both places, the ETF and personally.
Weiss, what do you say? You own it?
Yeah, this has been my sell list for a while, and I was waiting for it to break through 100 and just got caught off guard, wasn't paying attention when it fell and kept going down. It's still on my sell list. I'm losing money on it, which is kind of tough to do in Uber. So
has the story changed?
The story has changed. Story has changed. If you go back to overhangs, now clearly the overhang is robo-taxis. And do you believe what they're doing there or what they're trying to do? I don't think robo-taxis are a big issue right now. I actually think it's going to be a little while, but the market doesn't seem to be patient at all with these kind of stories, see how they work out. They go to what's working and why it's momentum market, which talks to the risks that Jimmy mentioned on overvaluation. So I'd say I'm a likely seller of this. You may ask, well, why did you sell and take advantage of the tax loss on, last year? And that would be a great question, but I keep waiting for it to get back into the 90s, and it's like, why? Like, why am I doing that? So near term, I'm likely to sell it.
Can I ask these guys a question?
Go ahead.
A legitimate question, right?
Yeah.
I'm not in the stock, but when I think about it, the first thing I think is it's a transportation stock. That's the first thing I think. Transportations have rallied, okay? This obviously has not. What is it? Is it an AI stock? Is it a software stock? What
It's a consumer stock. I look at it as a consumer stock.
Yeah, but then you look at something like Tesla or GM or something like that, a consumer-oriented stocks, the Winds, the Hiltons of the world, they've been doing well. I'm not calling you out. I'm trying to figure out what's going on here.
Exactly what we talked about.
Yeah.
The competition for autonomous with Waymo and Tesla.
So it's okay, got it.
I don't think it's any more complicated than that.
Right. So
That's
I'm going to
what
qualify that as it is not a transportation stock. It's not a consumer discretionary stock. It is an AI/software stock. That's why it's stinking along with the rest of the software.
Yeah.
I wouldn't go that.
I wouldn't say that.
Okay. I mean, I'm not in the stock.
That's a bit of a leap.
I'm not in the stock, but I look at it all the time, and I'm trying to understand why this thing has turned into a dog when everything else with wheels is working. Well, so it's not a transportation stock.
Here's
it's not a hard asset stock.
You can directly correlate the news announcements with robo-taxis to the decline in the stock. That's really what triggered it. So that's all 100%. That matters here. That's all that matters, and I think it's going to be an overhang.
I think over the last several years, the tailwinds for this company came in two places. Right. Number one, it diversified the model.
The balance sheet and the earnings.
Exactly. So it diversified the model with delivery and then the balance sheet.
Yeah.
Because it was a hyper-growth stock that now has become a stock that has growth at a reasonable price, and it's profitable. And that was the reason in 23 and early 24 that you got excited about it. That's the reason why I owned it personally.
Let me tell you why I owned it, because there was scarcity value here. Because the lift was just kept bumping along. You didn't know if you'd wake up one day and they're out of business or they're retrenching further. So I had scarcity value to what the consumer and the business market wanted for transportation. Now, I've lost that scarcity value with robo-taxis coming from Waymo, coming from Tesla, coming from Boyd, coming all over, because don't forget, it's not just a U.S. company, right? So that's the issue, and that's the reason I should sell it.
That's what set Uber apart from Lyft.
Yes,
is all of the other levers that they had to pull. They were more global. Obviously, Lyft is not. Uber Eats and et cetera, they have that. Lyft does not. But now you have the increased risk, I guess, from the competition. Let me bounce to another name. It's Netflix. Downgraded today as well, CFRA. 130 is the price target. You guys both own this stock too.
Why?
Okay, another one that hasn't traded all that well lately.
Nope.
Another one that has overhang. This one being, well, what's going to happen with its bid for WBD? Warner Brothers Discovery. We're still waiting for that. There's your 6-month chart down 29%. What gets this thing out of the mud?
I don't know, and I have to deal with this because I own it in 2 places. I own Spotify and Netflix personally and in the ETF for the better part of 2025. Tried to buy Spotify again in the last several weeks, didn't work. But as it relates to Netflix, it is really just bumping at the bottom here. And I don't know whether it's walking away or losing out. Maybe that helps. I don't know what the fundamental catalyst is here. But it does not look good sitting between 90 and 95. It's just vacillating at this area. And from the perspective of owning in 2 places, it's not good.
I want to get one more in real quick. It's Disney. I bring it up because it has issues that we need to watch for in 26. So it was reiterated today a buy. $140 is the price target at B of A. Succession.
Yeah.
Iger Succession. Is that the main thing you're watching now through this year as you own this stock?
It's not the main thing. It's important. It's obviously important.
How can it not be the main thing?
Because I think we know who it is, right? It's going to be a heck of a surprise if it's not a co-CEO between Josh D'Amaro and Dana Walton. I mean, that would just be a very big surprise. I could be wrong, of course, but that's what the tea leaves read. I think the bigger issue here is execution. Demand, particularly for the theme parks, but execution on all things, whether it's streaming, whether it's studios, whether it's theme parks and new rides and new attractions. Ultimately, I find that this is a stock, to my opinion, is undervalued. But to use a word that we used earlier, I've got fatigue on this. I mean, I really do, and so do clients who own it. It's just been kind of hanging out there doing nothing for the better part of a year.
All right.